Cryptos ended the working week down 9%. Bitcoin also found resistance again at $72,000. Fortunately, over the weekend, their prices have stabilized. However, this begs the question, are we ready to see further downside for Bitcoin, cryptos, and the stock market after last week's job reports came out? You found your home of macro cycle analysis, covering Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. Make sure you smash the like button, help that YouTube algorithm out, and allow more viewers to see this content. The main comment I get from you guys watching the videos are, I wish I found this sooner. Pay forward the good vibes to someone else who wishes they could find the content sooner and hit that like button above. Links in the video description are for more information on TIA Premium, but I'll cover that later in the video. Today, we need to cover the new highest weekly closes for the S&P 500 and the NASDAQ, and of course, the crash that happened for cryptocurrencies and what indicator is showing up as a contrarian signal to the latest market action. Plenty in store for you guys today, so let's continue on with the economic data. So the first thing I look at for my analysis this week, because this is what happened at the end of last week, was the unemployment rate change. You can see it jumped up here to 4%. That was the actual, and it came in slightly higher than the forecast and the previous reading, which was 3.9%. So a whole 0.1% higher, which kind of freaked out the market there. But people have a short-term memory. From what I've known over the last 18 years as I build my trading and investing toolbox, is history and patience. The majority of people, vast majority, time and time again, do not follow history and they don't have patience. They forget what has come before and what type of situation we are currently in. You see we're at 3.9. We've been ranging between the mid threes, now just touching on 4. This was basically normal back in 2006, 16, 17, 2018, 2019. You can see it just started to slowly creep down. Now, the fearful part here for a lot is that it's starting to creep up. And so they're getting fearful that we're about to roll over into some sort of major economic recession or collapse, which leads me to the next major point. The stock market is a barometer for the economy, not the other way around. That is something that I've learned over the last 18 years as I continue to build my repertoire of trading and investing, let's call it wisdom. And I hope you're doing the same for yourself, keeping your own journals. What that means is that the stock market tells us what is happening in the economy as a forward-thinking mechanism. When we read the economic data, it is a lagging mechanism. This is something that Gann talked about in his books over 100 years ago. The stock market helps you understand what's going on with the economy, not the other way around. The economy doesn't help you understand what's going on in the stock market. And I hope many of you have seen that over the last couple of years as we continue to follow the bull market from the lows. Remember, there was a lot of information back at these times at the lows that suggested the market must collapse from that point. And of course, it didn't. Think of all the things that have happened over the last 2 years with inflation and interest rate rises and banking collapses and US debt ceilings and all sorts that have come our way. Markets continue to rise. And another thing with that is that it's basically climbing a wall of worry. So that's just a little bit of wisdom, I guess, at the beginning of the video. I wish I had that sort of stuff when I first started out because it's so hard to decipher what's happening in the market, especially when you just keep hearing bad news after bad news. This time it was something different. You know, it was the employment numbers going up. Next time it might be something to do with the interest rates. So that leads me to the interest rates. Now, I've been following this for quite some time. You may have seen it here on the channel. This is now 5 months ago. January, we talked about the possibility of no interest rate rises. You've heard me talk about that many times before. And again, we've seen it go from cuts to pause. The markets are strong. The economy, crazy as it sounds, I know, is strong for now. There will eventually be some sort of recession. There always is, but it doesn't happen as often as most people believe. And now we're seeing interest rates go up again. So this is the change that we've seen recently, as I posted end of last week about this. And September is looking like it might be on pause as well, which is in stark contrast to what has happened in Europe and in Canada. And people suggested this last week, saying, well, Canada's cut rates and Europe is cutting rates, therefore US. Unfortunately, it doesn't work that way. It could, US could cut rates, but if we look at the economy and the world GDPs and basically who runs the world, well, it's the US. And the US isn't necessarily going to take its lead from a country 1/10 its size, being Canada, roughly speaking, 1/10 its size, and change its interest rates based on what they're seeing north with an economy that's 1/10 its size, or even less actually when you look at the GDPs, just talking about the population being 1/10 there. As with Europe, I mean, population's over 1 billion, but their GDP's nowhere near what the US is either. So they're not taking their leads from Europe or from other countries. US is the powerhouse for now, and probably into the foreseeable future, at least in our lifetimes, they're going to be making the decisions here based on what they see in their own economy. That's how I've read the market, and so far it's worked out relatively well. At the end of the day, everyone's free to do what they want, and if they do believe that interest rates are going to be cut because other countries are, well, if they believe US interest rates are going to be cut based on other countries, you're free to believe and make decisions based on that yourself. But as I see it, I still can't see a reason for why these interest rates would be cut. And for now, at least the market can't either. Coming up this week, actually, in a few days' time. Where are we at? 2.5 days to go. And then you've got the July and then the September, so on and so forth. We'll continue to cover that. So that's my look on the economy at the moment. As for the stock markets themselves, new highest weekly close in history for the S&P 500 and also for the NASDAQ, a new highest weekly close. Does this mean we're going to rocket up to new fresh prices? At the end of the day, the swing is your friend and the trend is your friend. You would think it's possible that it could. However, I do bring up what happened last time we got into a new all-time high. Last time, new all-time high closes. So just looking at this area on the chart for now, you can see that the S&P did hit a new all-time high weekly close and another one, but it was kind of short-lived before you had a correction. So you see this correction come in, then the market moves away from that point. Is that going to happen again? Obviously, we'll just keep watching the chart. We don't need to know for sure that it must or must not happen. We just need to keep following the trend. And for now, the trend has been our friend for a very long time. The prices have been up, higher lows have been forming, and the market has been conforming to a bull market, which continues up. To the downside, where I would start to get concerned that the bull market may have run out is if we start to break the 4,900 low. There's 4,963 for the S&P minis here. And then I'll be looking to the longer term, that's what the LT is here, the long-term support at 4,800, which was also previous resistance, which was also the previous old all-time high. So as it stands for the S&P 500, it's still looking in relative health here. And even if we were to see some sort of correction, you'd need to see prices come well and truly back under that 4,800 point level to confirm that the trend has changed. And in terms of a percentage, that is over 10% from the current prices. So it's not impossible, but it seems unlikely at this stage, even if there were to be a correction. So we've hit new all-time highest prices for the S&P 500. And the NASDAQ's also hit a new all-time high weekly closing price. And yes, there's many reasons for why this is happening, which if you are new to the channel, make sure you do subscribe. And for the rest of you, hit that like button, pay it forward to the next group who hopefully see the content before it's too late for them. Essentially, we've seen and looked at many reasons why the market's going up and how it should be collapsing with only a few stocks running and leading the charge. But at the end of the day, that's been happening for many, many, many months now. And markets can continue to go up longer than the majority think they should. We're hearing all sorts of reasons why it's overbought and it should correct. At the end of the day, just remain with the trend. That's the easiest thing to do there. Someone asked for an update here, and I've managed to find an update thanks to Almanac Trader looking at the pink line. So this is the seasonal pattern since 1949 to last year for election year purposes, looking at the pink line. Now the suggestion here, we've been looking a lot at the green line with the market just going straight up from here. Now Jeff's got a signal here looking at down April, up May, signals Q3 weakness. Now Q3 is this period right here, so July, August, September. If we look at the brown line, that's the one that he's got here, brown or orange. You can see that it's gone up for a couple of months there, and then it starts to head down through September and October. And the black and the blue line also do the same thing, except in a less severe fashion. That could come down to there is more data points for these two, being the blue and the black, which encapsulates all election years and STA aggregate cycle, whereas if you want to call it the orange line, is just years that have a down April and an up May. So there may be less data points, which show this line as being a little more volatile than other years. Nonetheless, when we're just looking at the flow of the market, across basically all of these signals, you're still seeing some sort of pause or correction leading up to the election, which you guys know I've talked about many times, so I won't put you through it again. When we look at each of those periods leading into elections, there's usually some sort of pullback through the 2 months leading up to the election, being September and October. You can see it back through here as well, and I'm not going to go through each one because I've done that before on the channel. So if this is to occur, well, then let's have a look at how Q2 and Q3 progress, which essentially doesn't give that much more of a gain. It could just be slightly higher prices. You get the correction into the election, and then pretty much every single cycle here shows big moves out of the election, which could be what's happening very similarly in Bitcoin and cryptos as we look at the Bitcoin price now. And so Bitcoin's been underneath the old all-time high now 88 days. This is the 88th day. We're up to our 3-month period now underneath the old all-time high. And you might remember that I've talked about this since March, so nearly 3 months ago, that I was looking at a possible time underneath the old all-time high after that 3-day down signal being roughly 4 to 6 months. Now, if this plays out into July and we don't see a new all-time high or a significant all-time high where prices begin to close above that level, then I'd say this signal worked again. I know people hate going through the same thing. They say, well, it's the same thing over again. Well, that's how trading and investing works. Any other job, you're a doctor, you're an accountant, you're an engineer. You look at the same things time and time again and you hone in your skill. But for some reason, when it comes to trading and investing, people want something new every day. They want a new headline that comes up every single day to say why something is happening. The sooner you can get rid of that, the easier life is going to be, especially for your own trading and investing. But nonetheless, there's always going to be a few people that will whine about it. But that's just life, right? So we'll get back to Bitcoin and cryptos. I just wanted to bring this one up here. It's recent news headlines. Binance reaches 200 million users with 100 billion in assets under custody. I just laughed at this. Nothing against Binance or crypto and Bitcoin. I want it to be $1 million as much as you want Bitcoin to be $1 million. But we've got 200 million users, 100 billion assets under custody, at least for Binance, and there's still no real use case for Bitcoin and cryptos. Sure, there's Bitcoin as gold, there's Ethereum as oil, there's Solana as another secondary oil. There's so many different things, but the main use case people are using it for, of course, is stable coins and essentially trading or gambling. There really hasn't been anything else. Of course, there's DeFi, there's gaming coming, there's AI, there's all these sorts of things. But until something sticks, this is pretty crazy that you can have such a big industry and really nothing that is being used as a real product out there. We'll leave the XR people to decide that on their own. But essentially, just looking at the signal, 3 days down, it's still in play as we see Bitcoin underneath the old all-time high for 88 days. What comes next and what do we do? Patience. Look for reversal signals. Do not get bored or scared and leave the market, meaning even if you keep your positions, don't just stop watching the charts. You can stop watching YouTubers and going on X or anything like that because a lot of it is pretty much garbage, but don't leave the charts. Watch the charts every single day because they'll start to show a lot of signals that come up when the majority aren't looking. And I'm going to come back to this because I think that's a good segue into what we're looking at when I suggested the title that we've got a contrarian signal here. This is what we have covered in great detail. The average true range continues to dump and capitulate while the market remains at these higher prices. Now, I'm not saying that it must remain at these higher prices. We might see a bit of a pullback, and I'll get to those price levels in a moment. But the average true range has happened every single time where you start to see this die out, the market get bored, meaning the buyers and sellers, the traders, they get bored, they leave the market only to find themselves chasing their tail when it gets extreme again. So that was the extreme move into the 70,000s. And then we had the pullback. And again, we're into the 70,000s with the true range, the average true range, so much lower than where it was before. It's nearly back to where it was during the ETF hype in the $40,000 region. So we're starting to get back towards some previous support and resistance on the average true range, which could suggest we could be in stall for a significant move. Up or down, of course, anyone's guess. And yeah, I'll just wait for the jokes in the comment section about that. But let's turn on some of the lines here and have a look. So here are our lines on the chart. We're sitting above 69,000. That dump on Friday closed dead on, or just above the 50% level, which is a relatively good sign. However, it is a short-term move. So if we start to have a look at the longer-term moves, back to this specific low here at 60K, the line comes in at 66K. So our 50% levels at 66. You've got your white line there, roughly about 66.7. And of course, the major 50%, it still sits at 64. So there's a fair bit of price support underneath the market, even if it were to dump. And this is the Bitcoin market, of course. It could still come back, sit at these levels up to around 64K now, and still be in a relatively healthy position. Now, of course, the major 50% comes all the way back to the move down, which sits at 65. So I would be looking at some sort of tests to 64 and then closes back above the major 50% level. So that's the main thing to look out for here for the Bitcoin price. Now, this little comment here is same price, but crickets, peak Bitcoin euphoria. So we've been at these prices before with peak Bitcoin euphoria. And now we're here again, and there's basically no noise. And this, I've talked about this many times before, but this chart here backs it up with data. So the data here, and data is because I'm Australian, that's how we say it here, less 70,000 excitement shows that FOMO has died down, which is good. Before, we had bounces above 70K causing FOMO top. So that was this complacency bounce back here in March. Again, we specifically looked at it here on the channel. I've got it there. Peak complacency bounce, days under the all-time high. This one here was the fake out. And you've got this huge, huge interest, initial euphoria from crowd after Bitcoin crosses 70K for the first time. So it seems like we're washing this out slowly. We've been 3 months, exactly what we've been talking about here. Go back to here. We go back to my journal, and I think hopefully you're all keeping a journal yourself. And that's essentially what we'll be looking at from this time forward. So what do you do from here? That's exactly what we just talked about. Well, the thing I'm looking for with altcoins is because I still think there's a major higher low forming for many altcoins. Watch where the support comes in. Does it come in above 50% or below? If it comes in below, then watch for the support and resistance accumulation zone. There were some accumulation zones back in 2023, that September-October period. So as long as it doesn't go underneath those levels, you're still holding up. So what the chart would look like, there's your accumulation, breakouts, higher, starts to break down. As long as you're getting a higher low form here, it doesn't come back under those levels, then when the market's ready to go again, it's in a stronger position. However, if you're picking something up that has started to drop back into that zone, that's going to be much, much more difficult because essentially the market is pricing that asset, this cryptocurrency, at the same price as it was before the breakout. So this whole breakout was essentially hype and nothing else to it. So all of those buyers had dumped the price again or dumped their cryptos, and the price is now back to where it was. So that's a much weaker chart. That's the why behind the chart patterns. I find that far more useful than figuring out what piece of news topic headline came out, which takes away from honing in on a skill. Obviously, you do you, but that's the reason why I prefer to look at chart patterns than try to pick up every single news headline for a particular cryptocurrency. The chart tells you all the news you need to know, and you can just look in one place, essentially like an RSS feed or something like that, right? So here we are, Bitcoin, same price, above 50%. This is all looking relatively okay, even if we see some further downside over the coming days or weeks, which in the last video, I looked at this particular signal here where Bitcoin weeks climbed 5 weeks or more, typically had shown a reversal. Now, something I failed to mention was the kind of the invalidation, but what can also happen from that point. And once they hit that 5 weeks, they can go on for a few more weeks over that 5 weeks. So my apologies, I didn't mention that. I did leave it in the video title here. The note, the signal can extend longer than 5 weeks. So yeah, keep an eye on that as well. But for now, we saw that we hit a new 5-week top only just by a few bucks on some exchanges. In this case, this one's here on Binance with USDT, and it had a much lower close on the week. It still is the second highest close in Bitcoin's history. So I think we've got a bit more time here to decide who's going to win, the bulls or the bears. The bulls are still in control while it's still above $65,000. So keep that in mind as well. Now, let's hit some altcoins and strong versus weak. I'll make this relatively quick, so tune in, like, subscribe, get your head on, and let's go. So we've got some of the top altcoins to have a look at and follow up on my previous post that I did on X. So a big one here looking at all the top altcoins, top performers, Sol, and then some positive results for BNB, Doge, SHIB, AVAX, Neutral, and TON. Negatives were ADA, DOT, LINK, BCH. This is just data itself from the chart, not my personal opinion. And the worst performing is XRP. So what we will see over the months, I think 2 weeks might be a little short, but it's showing up now already. So you can use this for your own portfolios to hopefully position yourselves in case we do start to climb higher with this stealth move on cryptocurrencies. Remember this stealth move as the markets get quieter. You see these lows start to form with the average true range, and then all of a sudden it blows up from that point. I don't want you missing out on that. Then you would see XRP continuing to decline and the stronger results continuing to go up. I was looking for another word there. Decline or incline. XRP, yes, it's continued to decline very, very heavily. Now, I've got this here. I think it's time I get rid of all this. Every time I've hated on XRP, I'm sick of seeing all of that there. It just covers the chart up, but that's the way people look at it. They think I'm hating on something. At the end of the day, this is like a turd that you have to get rid of out of your system. And it keeps hitting new lows. For whatever reason, forget the little 3 letters up here. If you see a chart like this, this is a turd that you have to release from your system. If you hate toilet jokes, maybe just fast forward a little bit from here. But the way I look at this is, why do people keep holding this thing? And I think it's got something to do with the hope that it is going to go up sooner and they're going to get their money back from this thing and it's just going to be the greatest thing, because you just keep hearing all of this hype about XRP. And it's created such a weird community of people that just hope and pray for it. An analogy I came up with, you can rate it down below, is that you're holding onto a turd, hoping that you're going out in public and you're trying to find the best public toilet. And you keep holding on, and the toilets just keep getting worse and worse and worse. And you're thinking, there's got to be a better toilet. Oh, there's a better toilet there. It had a little bounce. I'm going to find a better toilet than this so I can go and get rid of this turd. And then all of a sudden you find yourself in India on the side of the road after getting off a public bus, flies everywhere, the heat's disgusting, and now you've got a squat toilet and the floor's filthy. And you're just like, I can't get rid of this just yet. There's got to be a better opportunity to the upside, and I'm going to win this thing. I'm going to end up in the Shangri-La with a beautiful marble toilet seat and, you know, the best toilet paper, right? But that doesn't happen. And then you find yourself without toilet paper and you really don't have any options left. So you just keep holding on to this thing, and eventually you're going to crap yourself because it just keeps going lower and lower and lower. And it's nearly at a new all-time low. That's it, new all-time low. So that's my toilet story on this one. I thought I just had to get that particular joke out. Like it or leave it, whatever. That's the sort of chart you don't want to see. Forget whatever letters are up here. Onto something else, Ethereum, the second highest cryptocurrency. It's still holding ground here, above 50%. So the next one's going to go through a little faster. ETH holding up relatively well for now, above those 50% levels. It needs to remain above 0.051. Now, Solana and BNB are something to look at because that's been on the chart here as the top performers about 12 days ago, and XRP was the bottom. It's continued to be the worst performer. Solana continues to hold ground after a pretty stable run to the upside. It's still under the 50% at the moment by 0.0024. Ideally, you want to see this thing get back above 0.0026. Otherwise, if it breaks down, this is your last line of support here at 0.0018. That's where you don't want to see Solana. BNB has been making all the headlines lately, continuing to climb against its Bitcoin value, which is what I've been assessing these cryptos on these last, the last couple there. BNB has been putting in higher lows and continuing to show strength against its USD value, hitting a new fresh all-time high. It has had a lower close under those previous tops, but nonetheless, it's still got a highest weekly close in history. This is its value against BTC, and it looks like it's attempting to put in a higher low. Now, I have covered this over coming up to a couple of years now, looking at the possibility of a 22-week downtrend. Now, we saw 21 months up. Sorry, it was a 22-month downtrend. 21 months up, 21 months down, 22 months up. So a pretty cyclical pattern here. And for now, with BNB, it has seen a 13-month downtrend now with a few months up. Now, this time round, unless it gets a pretty quick dump into August or September and takes out that low, it might be putting in a higher low here for that same 22-ish month cycle. So keep a lookout for that with BNB if it's unable to get back above some of those 50% levels overhead. Okay, so look out for a potential higher low forming in the coming months. So that's a look at the two stronger ones. They've definitely been performing as per the charts. Top performer there, BNB, has been stealing the show over the last couple of weeks. And the last one I want to look at here, which wasn't in the top 10 because it wasn't in the top 10 cryptocurrencies, was Render. This is Render against BTC, still above the major 50% level, corrected onto the 50%, had a bounce, and then is back down underneath some of those lows, but still above the higher low here. So that's all still going relatively smoothly. What you've seen in the past, 100 days to the downside, 50 days to the downside, currently roughly 85 days to the downside. And provided it doesn't take out the previous lows, then I'd consider this still a holding pattern for Render BTC. So when the market does turn and start to head up, you're probably going to see faster gains on some of the stronger altcoins than you would on the weaker altcoins. And this goes for all of those weaker altcoins. So here you are, the total cryptocurrency market cap. Like and subscribe. Heaps more coming up on this over this week right now as we start to see the prices, at least for now, stabilize. I hope I don't post this out and then the thing just dumps straight down. But if it does, we know what to do. We just keep a lookout for where the market drops to. Does it take out the previous lows and the 50% level or not? Does it find a basing pattern before it starts to move again? Because we're also watching this incredible, what I think is an incredible signal here that has been plummeting over the last few months now since those tops. And typically what we've seen is that it turns into a stealth pattern where the prices begin to rise, and the average true range also rises in darkness where the market is not listening. You can see here the excitement is out of it according to that data, and we see the stealth moves happen on the altcoins putting in higher lows, again higher lows, and I think we're in the midst of that now, looking at our 4 to 6 months underneath the previous highs. Thanks again, guys. Like and subscribe. I'll see you guys back at the next one. If you enjoyed some of those stories and the wisdom in there, let me know in the comment section. I'll leave that in the pinned comment at the top. Other than that, join us for our free weekly report coming out tomorrow, and also our channel sponsors SwiftX and Bybit for your crypto exchanges and freebies there. All right, till next one, take care and peace out.